Что ела макар прыгал. Истинный спрашивает, что я стуса. Истинный скала создан даст. Истинный скала что может.
What's up, YouTube? Welcome to Weekly Markups Review, where we go over our trades of the week that we ended up taking. But this week is going to be a little bit differently. So this week we are going to go over our losses that we ended up taking this week. Even though we ended up the week doubling our account, I feel like it's more important to go over the losses than the wins and learn how to adjust to them. So as you guys can see here, I do have it rewinded a little bit all the way to the 14th was when I took my first trade on EN. So I had an entry at, I'm gonna do my top entry, 67,259. So $67,250. I'm gonna just go here. So this is where I had my first entry place at 259. And as you guys can see here, we do have the market finally coming up and retesting a trend. And what ended up happening was I felt like it was about to reverse right here. It was coming up to a reversal point. Now, my mistake that I made was that I did not wait patiently. That is the first mistake that we made right here. So we did not wait patiently. My reversal point is all the way up here. Now, if I hide this fib, you guys will see that it had some ways to go. But it was giving a wick rejection, and the wick rejection came where? It came right up to this reversal point. Now, granted, I did not have my fib drawn up before I took this trade, which is my mistake on that end. But now that I see it, now I see I could have been a lot more patient. And I really jumped the gun on this trade because, as you guys see here, I was thinking like, okay, we have some divergence going on, which we did. We did have divergence going on, but just because you see divergence does not mean that the market is about to drop right away. It could go up a little bit. Now, I did not lose a lot on this trade at all. I really had a tight stop loss. My stop loss was at 67,600. I'm gonna get my so 600. Now, y'all see this, right? Like, it barely wicked out at our stop loss. Now, I'm not even mad at the market for making that move because what did I just say? I could have been a lot more patient. If I would have took an entry up here at the reversal point, I definitely would have had my stop loss higher than 600. I would have been able to have my stop loss higher than 600. So that was, like I said, just being more patient on my end. That was my mistake. And it wasn't a bad trade at all because as you guys see, it did end up selling. I wanted it to sell lower though than it did. It ended up hitting TP1 from the entry, but like I said, I wanted to sell lower, so I held a little bit and ended up reversing, coming back and hitting my stop loss. So first mistake was being impatient. And like I said, I did not have my fib drawn up, but if I would have drawn it up, I would have been more patient. I would have waited for it to come to this level right here and then sell down. But overall, it was a great trade. Not a bad trade at all. As you guys will see, like most of our trades that we did ended up losing on they wasn't a bad trade. We actually ended up getting the trade right. We just took bad entries. So on that one, that was just a bad entry. And if we go forward, you guys will see it never came up. Well, it came up to this point again, but once it came back up to this point again, what happened? It rejected and sold all the way down, and it would have smacked where I was trading this, where I was taking this trade to. And as a matter of fact, it even had a minor retracement, could have re-entered right here, because as you guys see, what we have a structure level right here. It did not break back above the structure level, which basically our demand zone became a supply zone, and it sold back down. So that would have been a great trade that you could scale, that you could have scaled right there. And that is what we call profit scaling. So that was the first loss that we had ended up taking. So moral of that one, being more patient. Let the market come to me. Letting the market come to me. Now the second one was USD CAD for sale as well. This was also on the 14th. So let's rewind it. We're gonna go all the way to the 14th. Now, my entry on this one was 2807. What the world? 28057. Okay. I'm not gonna lie to you. I just looking at this right now. I don't know what the world I was taking. Okay. 28057 at what time? 4936. Wait, 15, 1749. I'm gonna just put it at 0.54. All right, so I was taking a sale on USD CAD. Now let's look to our left and see why did we take this trade? Because looking at this right now, I cannot tell you why did I end up taking this trade. Actually, never mind. I do remember now. Okay, so you guys see here, we do have a structure level, right? This zone right here is obviously a zone where sellers are in the area or in the market. And what I saw right here was the wick rejection. We got the wick rejection as soon as it entered the zone, right? So we ended up getting that, and I was like, okay, we got the wick rejection. It looks like it's one in the sale. I did not enter right here though. So I let it actually come deeper into the zone, and that was when I ended up placing my entry. As soon as I saw a selling candle again, I basically hopped in at the opening of this candle right here. And as you guys see, it did not go down any further from right here. So my mistake right here was I did not enter on enough confirmation. I should have waited until I got more of a bearish candle. I tried to catch the top of the trade. That was my fault. So wait for your confirmation. Other than the candlestick confirmation, let's see. We do kind of have divergence right here, but it just wasn't enough selling momentum once it entered this zone again. It was very little movement, and I entered just going off of one candlestick. I should have waited longer. Definitely could have waited longer for a better candlestick and getting that rejection. Also, what I could have done was, we have a minor support right here. So I could have waited until the market came and retested this support and see if it was either going to come down and bounce off, or see if it was going to break through. If it would have broke through here, then that would have confirmed the sale. Now, another thing is, it ended up creating a higher high. So that's not what we want to see for a sale confirmation. We do not want to see a higher high. We actually want to see a lower high. in order to confirm a sale is about to go on, or there's about to be a reversal market. Because as you guys see here, the market is on a strong uptrend. It's on a very strong uptrend. So we could have waited for the market to create a lower low and a lower high, and that would have been a sign of a reversal. And that, at that point, we could have been looking to take sales then. So what's that mistake again? For one, not being patient and waiting for the market to do what it do, but jumping in too early and not getting your candlestick confirmations that this market is about to reverse. So that was just a bad trade overall. That was just a bad trade. Took it way too early. But we did end up capitalizing on the sale later on that week. And as it came higher, we ended up taking that sale. And you guys will see here, we ended up taking it up here. We ended up taking it up here, and it broke through all structure levels and ended up smacking all TPs until it came down to my reversal zone, ended up consolidating a little bit, and we took the buy back up, and it ended up retesting this trend. So now for next week, we're going to be looking for this market to retest this trend, which it already has, and we're going to be waiting to see if it's going to create a lower high, because it already has created a lower low. So if it creates a lower high as well, we'll have a point A to point B at that point, and we can take the sale for USD CAD. All right. So we got USD CAD again. Apparently I was very eager to take this trade because I just feel like it was about to sell. But 28,489. 28,489. So same thing. Same thing. Only difference is I took it as soon as it got to the top of the zone. I was like, okay, did it sell down here? Maybe it's going to sell up here. And it proved me wrong again, and it did not sell. But let's zoom in closer to this market and see same thing. What do you guys see at this entry or coming out of the supply zone? We see a very bullish candle. We got a very bullish candle. And as a matter of fact, we got two consecutive bullish candles impulsively breaking out of the zone, which is a confirmation that this zone is about to be broken and is about to continue on for a buy. Because as you guys see here, it broke through, retested the zone, and what happened right after that? It continued on to buy up. So you said what?
I have a question. Would that be considered an order block?
This right here?
Yeah. Well, no, the beginning.
Oh,
yeah,
this right here?
Yeah.
I wouldn't say not yet. And the reason why is because the market was already on an uptrend. It's not like it just started the uptrend, it was already on one. So I wouldn't really consider that one an order block. And also it's not very, very bullish right after that candle. Like, well, right here it is bullish, but I just wouldn't consider that one an order block. Not as so that was the reason for that loss right there. So two bad trades back to back on USD CAD. I knew this market was going to sell down, but like I said, guys, like it's not a matter of if, it's a matter of when. That's the hard part of trying to get into a trade, because you know it's going to come down eventually, especially for a pullback if it's on a strong uptrend or vice versa for a buy. You know it's going to go, or you know which direction it's going to go in. It's just a matter of trying to figure out when is it going to do that. When is it going to do that? And at that moment, that's when you wait for your candlestick confirmations. You wait for conversions to line up, which is multiple confirmations all happening at the same time. Right here, neither one of them we had either or no type of structure break. The structure break that we did have was the structure break that we was not looking for at all. So, well, in order to take the sale. So we did not have any of that going on. We had the divergence, you know, we had the supply zone, we even had the resistance, everything, but we did not have any confirmation that this market was ready to sell down at that moment. And you could tell by just looking at the market. Trade what you see, not what you hope. At that moment, we was trading to hope that the market would go down at that moment. Where if I was trading what I was seeing, I would be able to tell that the market was going to continue on an uptrend and it was not ready to sell yet. That is the difference between trading what you are hoping to happen, trading what you are seeing happen, or seeing happen. So, very important, very important note to take down. Trade what you are seeing and not what you hope will happen in the market. So next we have gold. All right. So gold we ended up taking on the 15th. So let's rewind all the way back to the 15th. There you go. All right. So were we wrong about the buy? No, not at all. Again, it's just a matter of when we take it. So gold I took at 1771. Oh, 04. I'm just place it right here. So, again, not just a terrible trade, because if we look to our left, okay, we know that we have resistance at this point. I mean, support. We have a demand zone. We have support at this. So if I was to mark this up, good trade, right? Pretty good trade. You know, well, pretty good structure right here, I would say. Now, again, we do have the candlestick rejection that we see right here. That is one confirmation that we want to see. Okay, we saw that going on. Now, at the point that we ended up taking the trade, let me see if it was at this time. 1634. So I took the trade here. All right, so this is when I took the trade. I took it on the second retouch. So from the moment I took the trade, it did buy up. It bought up, and I was able to catch some pips off of it and get some profit. But I held for too long. Now, what is the problem with this trade? You may ask. If I had all of that going on. Problem with this trade is you guys see that our zone ended right here, right? It did not, well, it was not able to break back out of the zone. It did not break back out of the zone. So if it would have impulsively bought back out of the zone, then that would have confirmed that, okay, buyers are still in this area pretty strong, and this may continue back up either to here or higher. But what ended up happening? It stayed within the zone and actually broke below our zone, which is a confirmation that sellers are still in control of this market and it is going to sell down. Not only that, it created a lower high and a lower low right here at this point. Now, it did end up coming back into the zone, but again, it got rejected out of the zone, or it rejected back into the zone and sold back down all the way to here. And I want to say we actually ended up losing it right here before it even came back in. So, you know, if stop loss would have been lower, we maybe could have been able to, you know, close out up here, go ahead and take our profit and see what was going to happen later on and avoid a loss. But ended up getting stopped out right here. So the problem with this one is, was it a bad trade? No, because we were in profit. We could have took profit, but we just held it too long and the market ended up reversing. Now, to watch for in trades like this, if you are going to, you know, take a trade like this, definitely make sure that the market ends up buying out of the demand zone and vice versa for a supply zone, make sure the market ends up selling out of it. So therefore, it can confirm that the market is going to go in a direction that you are hoping for. And then be careful that if the market does re-enter that zone, you definitely want to come back and watch it and see, okay, why is the market re-entering this zone? Is it getting ready to break through, or is it just consolidation going on in the market right now? And it's up to you to be able to determine what is going on. And if you do not know, do not take the trade, or go ahead and break even on the trade and watch it and see what's going to go on. And if it breaks out of it again and you have strong bearish momentum out of a supply zone or strong bullish momentum out of a demand zone, then you can take that trade again. It's okay to leave money on the table. It's okay to not catch the tippity top of a trade or the complete bottom of the trade. You know, it is okay. As long as you are still able to be profitable at the end of the day, that's all that matters. So that was gold. And that was the reason that we ended up losing that trade. GBP USD. Actually, I'm not going to count that. I literally only lost $1 on that. That's not. I'm not going to go there. All right, so we do have another one though. On the 16th. And the reason that I'm going over my losses is because I took a lot of trades this week, guys. A lot of trades. More than I should have taken, honestly. But like I said, we were still able to double our account and ended the week very, very profitable. So that's fine, but I'm probably not going to take this many trades ever again. So gold, we ended up taking the sale at 16. Oh wait, let me go 16. Boom. All right, so GU. We took the gold. I mean, what am I talking about? We took the trade at 32,703. At 14, which is 1 o'clock. No, 14 is 2 o'clock. Yeah, this is an army time, so okay. All right. So GBP USD. Right here, we ended up taking the sale. Now, no divergence is going on. So said, why did you take this trade? Why did I end up taking this trade? Let me see. I can tell you why I shouldn't have taken this trade right now. I can't really explain to you why I took this trade. Because I cannot remember since I deleted my old markups. But I will say this. Looking at price action right here, we see a higher high, a higher low, higher high, a lower low, and a lower high. But what ends up happening right after that? We go back to getting a higher low, and then a higher high, and then a higher low. So on that, I believe I was just going straight off of candlesticks because I do believe I had this zone marked up. Right. So I do believe I had this zone marked up. Actually, all the way back here. And what I was basing this off of was as soon as it came out of the zone, it ended up selling back into the zone. And I was thinking it was just one of them situations where it faked out like it was gonna buy up, but what ended up actually happening was it did not break back below the zone to confirm the continuation of the sale. Also, we ended up getting some news that pushed this market all the way up. So you guys see, like, this is a very, very, very bullish candle right here. There was some news that came out that ended up pushing this market up, and we ended up, getting stop loss or stopped out of it. But it's really hard to say how this trade would have turned out. Because if it wasn't for the news, this probably could have sold all the way back down. It more than likely could have. But ended up buying up, and that's what caused this trade to get stopped out. Now, way to avoid this, check the news. Know what's going on in the day. Know what is going on in the day. So therefore, you can avoid situations like this. GBP, JPY, same thing happened. Literally, got stopped out. Now we did end up catching the sale. We did end up catching the sale down on both of them. I call it GBP, JPY, and VU. So both of those, we did end up catching the sale back down, and we were very profitable on that. DJ, I got in at 152.573. So I was able to catch the top of this trade because I knew it was going to sell down. Literally, I entered right here and caught the sale all the way down. GU, we entered on 1.33629, 1.33629. So same thing for here. So same thing for GU. We was able to catch the tippity top of the trade and sell it all the way down. We look to our left, where did it come to? A reversal point. We look to our left on GJ. It ended up passing our reversal point, but where did it come to? Came to the next one, or the major structure, which ended up marking up the major trend line. It also came to an order block, and this is one of the probably the best trade of the week, just for how accurate the trade was and how many confirmations it ended up lining up with. So yeah, that was for GJ. But we ended up catching the sale on both of them all the way back down. So regardless, we ended up making back what we had lost on that trade right there. All right, so like I said, this was one of the trades I also tried to scale. So we entered at 152. Oh yeah, we had entered again right here and it ended up hitting stop loss as well. But this time I had my stop loss real tight because I was like, okay, if it goes above here, it's obviously going to continue back up. But it didn't really continue up. It just got wicked out and it sold down. So, I just had a really tight stop loss on that one. All right, so Euro NZD. Let's go over that one. And that was on the 17th. So all right. So G or Euro NZD, we ended up taking a loss on that one. Even though it went in our direction, I believe this one was one that we ended up either taking too early or had a more than likely we ended up taking too early from what I'm looking at. So we ended up taking this one at 66.563. Mhm. This one don't make sense. Hold on a second. 6 o'clock. Okay, so my entry was at 66,563, but it did not come to that point. So not really sure about this one, y'all. I'm not gonna lie to you. Unless I took it on this day. I had to take it like on this day. And then it ended up reversing, but it actually closed out on the 17th. So yeah, that's what happened. So I actually took it on the 16th, but it ended up closing out on the 17th. So closed out at 7:02. Closed out at 7:02. This is our stop loss right here. I have right there on the trend line. But again, this one right here, we got the rejection off of the trend line, right? We got the rejection off of both trend lines. I had a downtrend and I had my primary trend was the uptrend, which is major structure, and then the secondary trend was the downtrend. So we got the rejection. We got like great confirmation. We got 2 engulfing candlesticks, both selling down. Even had divergence going on. But thing is, it failed to break this second structure right here, which is the second trend that we had, and it rejected off of this one and ended up continuing back on. So thing about this one was minor structure did not overpower major structure. The major structure was the uptrend. You guys will see major structure was the uptrend, and minor structure was just not able to overpower that. So yeah. Also, we entered on this at a late point. The market was also in its third retest. So you guys know, or if you guys do not know, actually it was about on its, no, it was on its third retest of the secondary trend. So on the third retest, you guys want to be careful. Really, that's what it was. But we are looking for this trade for next week. We got an impulsive candle already right here at the trend. But as you guys see here, last time it did that, came down and then it had a pullback. So yeah, we'll go over that next week. But yeah, that was the reason for that trade. You know,
What's the significance of the trend lines crossing?
Yeah, just insignificant. Like a very big inconvenience. Just inconvenient. That's really it was just an inconvenience. You know, way to avoid this loss though was we could have waited and got the 3 black crows and waited for it to break this trend, this second trend right here. Once it would have broke this trend, then it definitely would have confirmed the sale. And we could have at least caught, let's see, if it would have sold down to the same as here, which it probably would have, it would have ended up creating a lower low, because what did it do right here? It failed to create a higher high. So at this point, it probably would have created a lower low. But let's just say at the least, we would have caught nearly 900. I mean, not 900, 100 pips. We nearly would have caught 100 pips at the least. And you guys know, like, that's the goal for the day. You usually try to at the least catch 100 pips for the day. So we would have been good. And like I said, more than likely would have created a lower low all the way to I would say at least to here, selling for 130 pips. Or actually down to here, which would have been nearly 200 pips. So yeah. It's just inconvenient, but we also could have avoided it. So make sure to do better next time on that one. Just watch out for all structure, especially if you're coming to a major point of structure. Be careful. Be careful and watch the market. See what it does once it approaches that level. No matter how confident you are in the trade, if you're trading off a minor structure and it's coming to a major level of structure, pay attention to what or how it reacts at the major level. All right, so GJ, we ended up taking this buy right here off the trend line. You guys see the market is on an uptrend. Now, my mistake with this one was, you guys see like the market is very indecisive right here, right? We got wicks coming out the top and the bottom. Now, in most cases, yes, we do want to see wicks coming out of the bottom like this. That's a rejection, right? We like to see that. And we did go in profit for a little bit. I should have closed out. But a mistake right here was just really, you want to pay attention to what the market is telling you. You want to pay attention to what the market is telling you. So yes, we got the rejection at the bottom, but if you look at the top of the wicks or look at the top of the candles as well, we got wicks coming out at the top as much as they are coming out the bottom. You know what I'm saying? So obviously the market was moving back and forth a lot. And as the candle started to get smaller and smaller, I should have closed out, honestly. I should have just went ahead and took my profit because I took it right here at the bottom of the trend or right here as soon as it retouched. And I should have just took profit up here because the market was still indecisive. But ended up holding in the hope of that we may get an engulfing candle. But it ended up breaking trend and ended up coming down and hitting our stop loss. So that was similar to the gold trade where we went in profit and then it came back down and hit our stop loss. Same situation as that. We just took profit. When it's in blue, it's on you. When the market is, when your MetaTrader 4, MetaTrader 5, when your screens are blue, it is on you. It's up to you on when you want to take profit. But if you are going to hold a trade, make sure you are ready to hold that trade. Make sure you understand what is going on. Make sure that the market may be in a pullback and not a reversal. Understand that if it does not break this level of structure, I may need to pull out. Or if it does break below your level of structure that you were hoping to get in on, either don't enter the trade at all, which is what I suggest to do. If you are looking, like let's say right here, you was looking to enter right here for a sale, but you got to see that it clearly pushed through, do not enter that trade. Don't force an opportunity that is not there. Do not force an opportunity that is not there. So those were the reasons that we ended up losing the trades that we lost this week. I do not know how many that was because I do not care. I'm gonna be honest. I do not pay attention to my P&L. I don't care. Because you could take more. It's traders that take way more losses than they do wins, but they are still profitable. How? Because of proper risk management. That is how. Now, I'm not saying that it's not important to pay attention to your losses and learn from them. I'm just saying don't be trying to keep a record. That's why I don't keep a record on my trades no more. Because at the end of the day, are you profitable? Yes or no? And if you're not, I don't care about your win ratio. I just don't. Because you could take 20 wins and take 5 losses, and it cancel out those 20 wins. That's just how it is. So that's why I didn't keep track of my losses, or know how many I took rather. I'm literally just looking through my positions that I took this week in my trade history, and that's what I'm going off of. And I'm scrolling, and I see I took a lot of trades this week, but I still, like I said, doubled my account. So that will be all for this week's weekly review. Do you guys have any questions or anything so far?
Yeah.
All right, what's up?
One, do people do like, is the trading thing like, is it still valid on the weekend, or nobody does trading on the weekend?
So the only thing that you're able to trade on the weekends is crypto. Now, I do not suggest trading crypto unless you understand crypto. Unless you understand how Bitcoin moves and Ethereum moves, do not trade crypto at all. And also some brokers, like, they have crypto available on their platform, but you have to have a certain amount of capital in order to trade it. KOT is about one of the only brokers that I know where you could trade crypto with like a low capital, like $100, something like that in your account. You could trade crypto. But
FX Sway also.
you said who?
FX Sway.
Yeah. So, but you do want to pay attention to the spread on those brokers, though. The spread
definitely.
will hurt your account if you have a small account. So,
Living through.
so yeah, definitely pay attention to the spread on which broker you're using and trading crypto, because crypto is very volatile. Very, very volatile. Especially now. It wasn't this volatile back at 19 and 16K or 20K. It was nothing like this. But now, at the price that it is at, it is very volatile, and you are able to lose a lot more than you were able to lose before. I remember Bitcoin had to move a little bit in order for you to make like $10.
Yeah.
It just moved a little bit now, and you got down 100, and you like, what the world? Like, so
crazy.
definitely make sure you're paying attention to that, using proper risk management. Do not pop a lot size that you cannot afford to pop. And what I mean by that is, if you have $100 lot size, don't pop anything above a 0.01. Don't go try to pop in the standard or mini lot size. No, you're not ready for that yet. If your knowledge is not at that level, what I say is trade at the level that your knowledge is at. Trade at the level that your knowledge is at.
Give me another day to do my markups anyway.
Yeah. That's what I say for that. And y'all know, like, I marked this up a while ago. And the market is still respecting my markups. Should have took this buy on Bitcoin. But I don't trade Bitcoin on MetaTrader anymore. Well,
So really,
you said what?
my fault. I was gonna say, like, so realistically, if you keep like a consistent markup, like on whatever a pair that you've been looking at, you can really trade on a daily basis.
Yeah. You know, it's people who literally only trade US 30. That's the only thing that they trade.
There are people who only trade DAX 32, German. Like, I don't know how they do it. Yes.
Like, it's people who only trade US 30, Ger 30, NAS. It's people who only trade gold. Why? Because they study those pairs.
Like, they get super good at it.
Yeah, like they study those pairs for a long time and become very, very, very consistent at trading those pairs.